Now, this is no easy task. This group of investors might be from all over the world, might be a financial tycoon in Russia, might be a wealthy individual in China, might be a private citizen in Kentucky or in New York City that wants to redirect some of their self-directed IRA or 401k monies into residential real estate, maybe in Southern California or Florida or in New York City. It doesn't matter. This could be a large group or a small group of people, but we're going to match these people up. Investors Ally is going to match these people up first based upon their like-mindedness as far as their criteria for real estate investing. And then once we create these groups of like-minded real estate investors, we're going to match these groups with aspiring homeowners like Max. So what happens is Investors Ally is nothing more than a matching service, very much like eHarmony. But instead of matching up two possible compatible lovers, they match up would-be homeowners with real estate investors all over the world, cutting out the banks forever. Now, you don't have to kiss on the first date, just like eHarmony. Once you find the right partners, however, you're ready to form a FARJHO structure, which is nothing more in the United States than a limited liability company. Now, it could be any structure, really, to be realistic. The group members can choose to use a corporation or whatever they wanted to, but an LLC is what makes the most sense right now in the United States. However, in other countries, they don't have an LLC, so in other countries, it will be a different type of financial structure or legal structure. Nevertheless, it's important to understand that if these people don't match, they will go back to Investors Ally and they will get matched up with another would-be aspiring homeowner or a group of investors until there's a match found. Once they find the right partners, they're going to form a new LLC through templated LLC agreements provided by Investors Ally to protect everybody. Now, Maxwell Smart and the other investors would then set up this LLC for the sole purpose of buying a particular home. This is the FARJHO structure. All members, the members including Maxwell, will all determine the maximum price that Maxwell can purchase based upon Max's desired payment and the amount that Maxwell has for a down payment and his capacity to make a payment, his safety in his job, a lot of things that they're going to look at. But let's just say this group has determined they're going to buy a home or allow Maxwell to buy a home at a maximum of $300,000. When they do that, Maxwell's going to put his 10% into the FARJHO structure LLC bank account, and then the other members, the investor group, is going to put their funds into the LLC bank account. Now, this bank account would be managed by a third party or a fiduciary or Investors Ally or the group itself. The LLC itself, maybe the bank account requires signatures from all parties before anything is released. So nothing is unsafe here. The potential homeowner then works with the traditional real estate agent to find the perfect home. This is where the realtor comes back into play. They would hopefully get an email about the time when their aspiring homeowner got matched up with a group, and then they would get another email when the funds have been placed into the LLC bank account, signifying to the realtor that they are ready to start looking for a home. But now they can buy any home on the market. REOs, traditional sales, short sales, condos, manufacturers' home with lands, properties with unpermitted granny flats. Anything that the group has agreed to buy wouldn't matter. The agent is representing, however, the LLC, not the individual, and makes all or any offers all cash. Can I hear an amen? If we were live, I would hear an amen. So instead of banging your head up against the wall trying to find a seller willing to sell to you or your client on a lease option or AITD, you might feel like you want to do the kitchen dance. I know I'm the king of corny slides. So the transaction, when the house is found and purchased, the transaction closes with the home free and clear of any liens, paid in cash by the LLC or FARJHO structure. No mortgage, no bank. Now, it's really important to understand that we don't want to start mixing oil and water here. This is a very different idea than debt financing. This is equity financing. So there's no prepayment penalty. That's a mortgage term. There's no interest rate. That's a mortgage term. It's not interest only. That's a mortgage term. So this is very difficult for some people to begin to grasp, but that's only because we've kind of been brainwashed into the idea that the only way you can buy a home today is to go get a mortgage. I wonder where that came from. I bet the banks had something to do with that. The homeowner is now a tenant, creating a new term. the tenant partial homeowner. He's really not partial homeowner at all. He's a partial owner of the LLC. He's a renter, a tenant of the home in the LLC. He is, however, a partial owner of the LLC, so the term tenant partial homeowner would apply. He's a member and partial owner of the LLC FARJHO structure. The LLC members will have already determined the rent to establish the agreed-upon return of investment. For this example, they've all agreed on 6%. Now, future FARJHO structures and the LLC members may agree on a higher rate of return. When interest rates go up and 6% is no longer a really good return on investment like it is today, FARJHO structures would actually probably have a higher rate of return. But interest rates would be higher then as well. Here's the math and how it might work. Let's say the purchase price is $300,000. That's what's being invested here. There is no mortgage. $300,000 times 6% for a rate of return of $18,000 or $1,500 a month. We're going to call this rent ROI, rent return on investment. Taxes are 1.5%, which means the aspiring homeowner does still need to be concerned about where he buys this house. If he buys in Meadowview in Temecula, for example, it's 1%. If he buys in Red Hawk, for example, it's 2.25%. So the aspiring homeowner still needs to be concerned about that. That's $315 a month as an average for 1.5. Insurance is $700, so he'd be concerned about where he buys as well in a high fire burn area or something like that. In this example, it's $700 at $58 a month. So the total rent to be paid by the tenant partial homeowner is $1,873. Now, all FARJHO members are receiving their 6% cash-on-cash return on investment every single month. But wait, Maxwell is a 10% owner of the LLC structure and therefore is entitled to his fair share. $1,873 is his total rent minus his share of the return on investment, which is $150. His net rent, therefore, is $1,723. A similar mortgage payment for the same house at 5% PITI and PMI would be $1,954, saving the buyer $231 a month or $27.77 per year. Maxwell still gets the depreciation value, albeit only 10%. He has no interest deduction because there is no interest being paid, but he gets the immediate savings of at least as much as the interest deduction would have given him in a lower monthly payment every month. So instead of having to get his deduction at the end of the year, he can get his benefit every month. Rent can't change except for taxes and insurance. He cannot be evicted and he cannot risk foreclosure. Foreclosure is a mortgage term. He still benefits from appreciation, albeit only 10%. He benefits from depreciation, albeit only 10%. Maxwell has 100% use and enjoyment of the property, however, and only 10% of the risk. InvestorsAlly provides the templates for the LLC agreement, the buy-sell agreement, and the lease agreement. If all members originally agreed to the terms, this is a very simple process to set up a new LLC, inexpensive, without the need or use of attorneys. Maxwell can buy the shares of his home LLC FARJHO structures from his investors anytime he wants to. If 2 years later he can qualify for a mortgage and wants to go out there and buy out his investors, he can do so. Or he can do so every other year whenever he wants and he has some extra money, he can buy back shares of his home. If his property value is going up, or if he believes his property value is going up, and if his goal is to buy more shares of his own home, then he'll want to buy them sooner rather than later. If the property value is going down, or if he believes the property value will go down, he'll want to buy those shares later rather than sooner. But if Maxwell doesn't want to buy more shares of his home, he doesn't have to. He could do something very different if he wants to be a real estate investor at all. You know, many people don't understand this, but most home buyers don't buy homes for appreciation or real estate investing or interest deduction or depreciation deduction. Most homeowners buy homes for the safety and security of having a home that no one can take away from them. They cannot receive a 30-day notice and have to move all of a sudden. This is why most people buy homes. Real estate investors buy homes for appreciation, interest deductions, depreciation deductions, and things like that. Now, when a homeowner wants those things as well, then that homeowner is a homeowner with a partial interest in investing in real estate. So if this homeowner wants to invest in real estate beyond his shelter value, he can buy real estate. He could become a tenant partial homeowner investor and buy shares of other FARJHO structures instead of his own in other locations, spreading his risk. Maxwell already has 100% use and enjoyment of his home. He owns 10% free and clear of any liens. If he has extra money, he can buy shares of other FARJHO structures in other locations that might appreciate faster or have less volatility. The shares he owns of other FARJHO structures would pay him rent ROI, which would be used to pay his own rent. If over time he acquires 100 shares of different FARJHO structures, it's just like owning 100% himself. A lot of people don't understand this. If you actually have 100 shares of FARJHO structures, you would own 100%, just like if you owned 100% of your own house. That's what's really important to understand. So as we go on to this, and I just got up to slow down the heat in my office. It was getting a little too warm. Okay, so the benefits of the tenant partial homeowner are real simple. The tenant partial homeowner gets to buy the home they want without leaving or having to find a seller to sell on a lease option or an AITD. He actually owns something without any liens. He can buy shares of their home or LLC FARJHO structure anytime they want. The buy-sell agreement provides for this if the members all agreed to it. The tenant partial homeowner is not on title with nothing on his credit report, so I call that security through obscurity. Rent is set for an indefinite term. Sudden expensive costs are shared expenses. Benefits to the investors. More than one investor involved with any FARJHO structure will spread the risk. One investor can invest in more than one FARJHO structure, also spreading the risk. You have a built-in tenant, no landlord-tenant relationship, no vacancy factor, no carrying costs, no mortgage loan costs. Rent ROI equaling, in this example, 6%, could be tax-free, could be higher in the future. Tax-free if it's coming from a self-directed IRA or something like that. Appreciation ROI averaging 7.75%. We haven't even mentioned that yet because these investors are not lending money. They own a piece of this property, which means they get the appreciation benefits of ownership as well. In Southern California, average appreciation is 7.75%, down from 8% at the beginning of this Great Correction, now just 7.75% at the end of this Great Correction. Depreciation, I've talked about that because you're an owner as a joint property investor, you get the value of depreciation flowing through to your tax returns. It's 1 to 2% improvement on your return on investment. So possible total return, 15% plus. Leveraging could improve this, but not suggested. However, it's not mandated. If this group wants to lightly leverage this property, they can do so to improve their return on investments. But now foreign investors can now invest in real estate in Southern California through a structured system without risking their money. Really important. There's so many. The largest legal document boom in the United States right now is the limited liability company. Not only are American citizens pooling their money in LLCs to buy properties in Southern California, Florida, and New York, and in a lot of areas, but also foreigners are pooling their money in LLCs. Very difficult to do, however, without the right people, and also potentially very expensive, and also potentially very risky when you give your money to somebody or some company and that's going to go do these flipping or whatever they're doing. Other benefits to the investors can get out anytime they want by simply selling their shares rather than having to sell a house. It's really important to understand that as the bigger this gets, the more liquid it will become. There's no lien on the property, therefore investors have no chance of ever being underwater, no chance of having mortgage problems or facing foreclosure or losing their whole investment or even a part of their investment. Big tax advantages in using the LLC structure to buy real estate. No one is on title and therefore cannot be found on public records. Benefits to the real estate community. You can now sell to 9 out of 10 buyers. I say 10 out of 10 buyers. Now these are the ones that have a down payment, have a desire to buy a home,